Hi, my name is John Lee. I am the CEO of Silver Elephants, and I have a 23-year career in the mining space. Started out as an investor, as a retail investor for the first 10 years. In the latter 10 years was the CEO and founder of Silver Elephant. Started out as a hobby, and then 13 years later turned into a double full-time job. Elephant has raised over $150 million on the Toronto Stock Exchange, and the flagship asset is the Blue Acai silver project with over 100 million ounces of measured indicated silver in the ground in Bolivia.
Right. Hi, John. We have met, but we were speaking about another company back then, but we've not spoken about Silver Elephant before. Look, I just want to kind of start off at a kind of fairly high level, just to understand what it is that we're looking at, and maybe ask a few pointed questions with regards to the kind of two assets and the two commodity classes. So, should we start with how did you pick the assets up? You've one in Bolivia and obviously one in Mongolia as well. So, can you give me the background?
Right. I started actually my career in the late 90s in the Silicon Valley. And I was very lucky that the valleys were going crazy and the company I worked for got bought out by Oracle. Then I moved up to Vancouver and then met a few silver bugs and befriended with the likes of James Turk and David Morgan and started growing very fond of silver. And I read everything underneath the sun with the Ted Butler. And I was also involved in GATA with Bill Murphy and I was doing what a lot of your audience is doing nowadays, putting together that Excel spreadsheet. And, back then, Matt, it was the start of First Majestic. I remember Silver Standards and Pan American Silver. I started before any of them were there. There was just the Hecla and the Corp. And so I was very fond of silver. I did a lot of studies and there's one project I like that is Blue Acai, and that used to be owned by Apex Silver, and they also own St. Cristobal, which is now becoming active again in the junior universe. And Apex Silver also had Blue Acai, and that was farmed out to another company called Apogee Silver. And I was one of the seed investors in Apogee. So I was in Bolivia very, very early, even before Evo Morales came out in 2005. I visited the project. And as I mentioned, Matt, around 2010, I branched into the running a mining company as a hobby. Unfortunately, there weren't a lot of interesting silver companies to be had. So I started out on nickel, as we talked about in the previous segment. But when the opportunity came, Apogee was puking out of Blue Acai to get into the cannabis business in 2015. I gave my call to Stan Barty and Dave Gower and Scott Patterson, and we had to call and draw some numbers in the NACA, and the deal was done. And then subsequently, the company changed the name from its previous iteration, Prophecy, into Silver Elephant, because silver is really my deep passion. A couple of things about Silver Elephant, we could go through some of the merits, but essentially, the project is a very bad stage. $40 million spent on it, 100,000 meter drilled, 100 million ounces indicated, measured indicated silver. Matthew.
Okay, so I know it's difficult because you kind of got two assets, two different jurisdictions, but okay, well let's stay with the silver for now. So you said you spent 150 million or raised 150 million bucks for the company as a whole. Does that on the silver, or does that include what's going on with the copper? The coal project.
Right. The company started 2009. So from 2009 to 2023, over the 14-year span, I've raised over $150 million through the Toronto Stock Exchange. Silver Elephant had
where's that gone? What's it gone on? What have you spent it on?
Well, we've done a lot of acquisitions. Our company was one of the highest flyers on the highest trading volume for consecutive weeks on the Toronto Ventures Exchange and Toronto Stock Exchange. We've bought several nickel projects, silver project, coal project, copper project, platinum, palladium project, and we've done a lot of over a dozen M&As, and our investors span across broad, almost every single fund on Bay Street had once in a time invested in our ventures.
Right, but so how's that benefit the shareholders? Because you've been buying stuff. Have you been then selling it and returning money to shareholders, or are you sitting on it as a kind of portfolio for as a kind of arbitrage to wherever the commodity price is going? What's the plan?
Matthew, to be honest, in the last 10 years, if you're a junior miner, I don't think much return has been delivered unless you're one of the unicorn got bought out in the right timing. So we're not glamorous in our share performance right now, but I'm pleased to say we are still what we were 13 years ago, and actually speaks to a lot about the commitment of the management in putting skin in the game and in surviving through the downfall. A lot of the assets spun out, and we had a big corporate event in early 2022. So the vanadium project was spun out into Nevada Vanadium, and that had over $15 million investment. The nickel project was spun out of Flying Nickel, that had another $15 million investment. Silver Elephant itself had over $20 million investment that stayed in the core, along with the legacy coal asset, which is actually generating a bit of a cash. We're out in Mongolia. The reason it stayed in Elephant is at the time, coal wasn't really sort of getting much traction, but in hindsight, it turned out to be a bit of blessing in disguise. It's generated about $500,000 in revenue for us this year.
Right. So are you sitting on stock and cash at the moment as well as these assets, or is it all the balance sheet value sitting in the assets and in these two different jurisdictions? How do we
the company has about just about $1 million in treasury. We had raised $1.2 million that was closed a couple of weeks ago. So a lot of the money that we had raised, all of the money we raised had been put in the ground, over majority of that money put in the ground in asset acquisitions, the typical feasibilities and drilling. During the spin-out event, Elephant had capped about half of the Spinco shares, but rather than Elephant keeping the Spinco shares, those shares were actually transferred to an investment issuer called Oracle Commodity Holding, and that is a private issuer, but of which Elephant owns a part of that, about 30%. It's a bit of a complex transaction. I think the takeaway, Matthew, is that Silver Elephant today owns 100% of the Blue Acai silver project and has a minority controlling share interest in an investment reporting issuer that has royalties and the shares of battery metals.
And who owns the coal asset? Or do you own 100% of that as well?
Silver Elephant.
Yeah, okay, you own 100% of that as well.
Yep.
Okay. And so, how do we value Oracle Commodities? Because it's private, it's always hard to know what that's worth, what it's got. And if you've got 30% of it, or Silver Elephant has 30% of it, you'd kind of want a sense of, well, how do we value that? So how do we do that?
It's art. It's evaluation is art of the. It's more art than science. I would say based on the equity holdings of Flying Nickel and Nevada Vanadium, you'd be looking at around 20 million shares at 18 cents times 2. Around $7 to $10 million.
Okay, $7 to $10 million. Okay, and what's your market cap today?
Less than 20. High, ironic.
Less than 20. Okay. Right. So I guess you can talk about how much you've raised and what the value. I say art versus science in terms of how you value some of those assets. The public, well. Your shareholders are valuing you at less than 20 million market cap today. So we need to talk about how you're going to create value, because obviously it's a long time. You've been at this a long time. You've picked up various assets, spun out various assets, but it's going to drive that value forward. So what do you say to your shareholders about how you're going to do that, and where is it coming from?
It's sort of, we're lucky. Well, I'm lucky in the silver space. We're not selling sort of abstract concept like arts or NFTs. An ounce of silver is an ounce of silver, and we're actually a very hot address in Bolivia. We're a driving distance to San Cristobal, not far from El Oro, Indian mining, and going south Argentina, we're about 200 clicks on the border, and then the other side is Abra Silver, and there's Silver Standards and Newmont. So you're asking me how we create value. I think first of all, a lot of that, sometimes there's a disconnect between the valuation, between the asset value and the share price. And just like Warren Buffett said, right, in the short term, it's a voting machine, and in the long term, it's a weighing machine. We were, Matthew, one of the highest flyers a couple of years ago in the run-up of silver from $15 to $30 2 years ago to 2021. So we're trading several million shares a day and close to $100 million market cap. Unfortunately, we had a sort of downdraft in 2022. Macro driven, where silver would just went about 28 to 16, and equity market was in tethers, just like as you know. But then that was further exacerbated by our spin-out event in early 2022, where a lot of vanadium guys are in Elephant for vanadium, or silver guys or nickel guys in Elephant for nickel. So as soon as they got their distribution shares, they were they were selling the elephant shares, and that sort of created a bit of a vicious cycle, and then the stocks were hit, and then just sort of went downward from there. Never imagine, we're trading at high of about, and then we had a 10% consolidation, so stock was close to $5, and now we're trading at 50 cents. So you asked me how we create value. I think, first of all, we have been hunkering down and minimizing our dilution. We didn't do a lot of corporate activities or promotion in 2022, but now seeing the bottom in silver and it's very definitive, indicative breakout in gold, first of all. So saying, well, let's reconnect ourselves with the investment community, first of all. Secondly, with the money we've raised, we're raising in total $2.5 million in the last 18 months by design. So now we have the money. There's open pit permitting we're looking into, a bit of sampling, a bit of exploration drilling we'd like to do, and then just try to bring ourselves back on par with the benchmark of other peers such as in Bolivia in the silver space. Right.
Okay. Well, given money's quite tight, I would say, and I know you raised a little bit of money recently, but and silver's over $25, which is great, and gold's doing its thing too, which usually is a good indicator. But do you need or to rely on the market to do the heavy lifting for you before you can make the next decision about how you spend money and how on the ground in Bolivia? Okay, because it's exploration is expensive. It's a constant revolving door of raising money, drilling, etc. So it's been a tough market in 2022. It hasn't really changed for equities in 2023 so far. But how are you intending on playing it this year?
Well, Matthew, majority of the heavy lifting for Pulacao is done. There's $30 million of drilling, 100,000 meters. There was actually a feasibility study in the past. And Pulacao is one of the very few silver deposits that had exceeded the century mark. I think you can probably count a number of those with two hands. So I think, first of all, there's been a couple of false starts at Pulacao where they had tried to commission the mining to production and tried a bit of a project financing to try to sort of start trial mining back in 2011, 2012. But by the time they're ready to go, it was 2014. So you can kind of say that, if you're driving the highway from Houston to New Orleans and you make a wrong U-turn, you're getting sort of middle of nowhere. So I think what we need to do is just sort of put the project back on track and reassure our investors that there's nothing, it's more circumstance driven than the project driven in terms of sort of how it got detoured or how it got derailed into sort of traditional path of, building blocks into production. We don't need to drill right now. So I think a lot of that's really, and you see a lot of some of the junior miner has doubled and tripled and quadrupled. And right now it's a bit of a buyer's market. We just want to make sure that we provide that exposure and then see how the market and some of our strategic shareholders have to say about the right future direction. I mean, if we're able to enlist a strategic, right, and with the funding, then obviously the roadmap would change quite a bit different. So right now, I think go back to what you're saying about the balance of sort of the boring road of going to FS and production versus exploration. I think that is something that we're yet to sort of figure out.
Okay, but I guess no drilling required. There's been historic drilling, historic FS. So you got a lot of data. I guess it's the question of how do you use that data to inform what you guys want to do and how you drive and create this value, or does it come back to? And there's nothing wrong with this. I just want to understand what you're thinking, which is we've got to wait for the silver market to move more. That will bring more interest and more investment into the space. At that point, we'll make a decision, but it's a waiting game. And like I say, there's nothing wrong with that. I just want to know, is that your thinking?
Well, Matthew, right now we're sub 20 million Canadian. It would just be a long stretch to say we have this grand scheme of bringing production in 18 months. I think it just is out there. Right now we're selling for our resource for 20 cents an ounce of silver in the ground. We need to bring that closer to our benchmark. And I think there are plenty of studies you can ask the Canaccord or Kendra Fitzgerald yourself on what the right valuation for that is. Secondly, in terms of the exit strategy, Matthew, we talked about that. I think we're just going to de-risk the project, get the permit going, maintain community relationship until silver is 20% close to the top, and that would be $40 or $50. Third is, Matthew, appearance could be deceiving, but I've been around the block for 23 years, and we know the project very well. I've traveled 40 countries, visited 36 mines. We have some of the the best experts like Bill Pincus, we just enrolled, and he's one of the silver legends and guru. And he founded Esperanza, was sold to Almaden and Alamos. Is that we know the project very well. It's very high. Like there's a portion of it is very high grade open pit oxides, over 200 grams of silver and 7 million ounces. So we have a very, very good idea of economics of the project and what it takes, what it's going to take to sort of bring that mine into production in the right price range to do that. But we cannot be out there, Matthew, and pounding out just to say that, because we don't have that feasibility study to back up. And also a lot of things could change. So I think right now it's just a little bit too much ahead to talk about a production scenario, given we're only 20 million market cap. The market is to convince that this is a legitimate story with a team that can take it to the next level. From there, then they'll be open and attuned to listen to what our strategies are.
Right, and I wasn't sort of trying to say, when to get into production. What I'm trying to say is, how do you create value, and where's it coming from? And that could be like going through the study phases, but again, that costs money. It takes time, to be ready for when the market does take off, for when maybe someone may come along and say, make you an offer. And talking of which, you've talked about buying a whole bunch of assets, and we've talked about Flagship, obviously as a spin out. In terms of funding this thing going forward, in terms of what your options are, because right now it would look like expensive money to go and raise additional equity. Have you got assets which you can monetize in some way, shape, or form? Do you want to monetize in some way, shape, or form, or do you think you're good in terms of this holding pattern whilst silver price and the markets, get better?
Right. The two things, Matthew. First of all, elephant, its rightful name is going to be focused on elephant. So I am 49 years old. I have passed the phase of collecting, well, not so much garage, but all the good stuff I wanted. And the valuation is such a absurd level that I would not be exchanging ownership of Blue Acai for something else so fancy. And we're busy sort of now putting together the assets are in their rightful places, in the rightful company. So, we have a dedicated team that are looking at how we can add value to the asset. So we're not looking to buy more assets, and we're not looking to divest assets. We're focusing on Blue Acai, and that's what we do. Secondly, Matthew, I'm interested in saying, John, how can you add value in the short, medium term? I mean, the long term, of course, exit strategy where they got buyout, put money in production. But in the medium to short term, we talked about, I don't think it's rocket science, really. A lot of the guys I've known from year 2000, they kicked the bucket. And a lot of the guys are, or they are ex-gen, maybe 5-10 years my senior, and they're retired. They don't want any, they're collecting yields and pensions, and they're not gonna sort of, they're done with this exploration story. So I think right now, we need to get back to the Gen Z and millennials that had not heard the story, and we just got to broaden that. And I think what I said is so as echoed by quite some of our peers, where their valuation had gone up double, triple for no apparent reasons. And I think our story is actually a lot more compelling compared to theirs. So I think first of all, let's just sort of get the story out, see where this thing stands, and get a feel for what the market's looking for. The only way we know that is just by talking to investors like yourself.
Right. Okay. But before going after the Gen Z and millennials, you got a bunch of existing shareholders who've seen sort of value destruction over the last, few years. They would argue, as far as you're concerned, you say it's a simple message. So give us what is a simple message for how you get back to the previous dizzy heights that you were at, and what are the things that you need to deliver on to be able to, generate that value? Because obviously we've been talking for a bit here, but if you just concisely give me that message for your existing shareholders and go, don't worry, it's going to be okay because of what?
Matthew, our existing shareholders have been very loyal. Every single one of our private placement existing shareholder participated more than 50% of the private placement. I wouldn't call it so much value destruction because, like I said, our share dilution is around 20% of what it was a year and a half ago, where some of the guys like Kuya or Silver One, I think there are many others, GRSL, I mean, they double their share count. So, I mean, where they're not adding more ounces. So I would say, again, short term is a voting machine, and long term is going to revert back to more of a weighing machine. And what's going to weigh silver elephant is its resource. So going forward, so what is our value add? What is our value strategy? Is I think we need to steer ourselves back to the highway to the end game, because we had a detour, we had to make a U-turn. So I think we got to communicate that idea that we have a very strong support from the local community. Bolivia is the place to be. The resource is bona fide and verified, and we continue to bring industry veterans to our board of directors and advisors to vouch for our project. And then sometime down the road, I don't want to do it at best at PFS at $25 silver. I think it'll be futile exercise. I think, maybe this time next year, we're looking at $35 silver. Then it'll be right time to spend $500,000, $1 million updated FS. And I think that's going to show very robust numbers. We're very confident because we're in a jurisdiction where the mining cost, the infrastructure cost is very low. And, all the parameters were very well known. I visited a number of mines in Potosi and in Bolivia. And so I don't think there's going to be a lot of surprises there's going to be a lot of surprises that we don't see. And I suppose, Matthew, the way I like to sort of approach our story is how the Germans play soccer, right? We're not Brazilian play soccer. We want to have our game plan and want to execute it. We have a lot of hiccups in the past, and I just don't want to repeat that one more. Vice Lord.
Okay, I hear you. Tell me this though. If we go to Mongolia, if you don't mind if we bounce over to Mongolia, right? Coal, you used a phrase earlier, you said that it is, so was it near-term revenue or something similar? You're indicating that there's potential for cash generation from that asset soon, and I guess therefore cheaply.
Right.
Is that right?
Well, Matthew, let me sort of go back to the value again, because this is unrehearsed in that. If you go back to that balance of FS production path versus exploration, I mean, Blue Acai was barely explored outside of the main two deposits. So there is a blue sky, and there we did geo anomaly, we did a systemic wide sampling program and mapping program. So there's a lot of very prospective targets that we can pursue and had never yet been drilled. I mean, there's over a dozen targets, and all of that data is on our website. In terms of coal, it had been sort of, Matt, to answer your question, it is in production. It's generated quite a bit of money, and I can also confirm that Mongolian operation is cash flow positive, and there's repatriating of money back to Vancouver. It's not in a position where it's just self-sustaining the company as a whole, but it's adding more than it subtract. And Matthew, I've been in the energy space for over 15 years, and thermal coal is one of the best performing commodity in 2022. If you look at Arch Coal, Peabody, these are 4 or 5 baggers. And so we are very bullish of energy going forward, just because the per capita electricity consumption, if you add the EV on top of that, power's got to come from somewhere. So because the project is open pit, massive open seam with 20 meters, all stripped out, and we're not going to expand the operation per se, but we're just going to keep a nice small scale that just, almost like a bit of like a dividend check that we collect on a month-to-month basis.
What's the quantum? Okay, you say it's white. Well, I'm not quite sure what you said. It's wiping its nose, but it's not quite yet self-sustaining, and you're repatriating some monies back to Vancouver. So can you give me a sense of the scale of it and what amount of dollars we're talking about? So
I'm talking about is our Mongolian operation is cash flow positive.
Right.
But if you want to talk about sort of quantify material numbers going back to the headquarters to be accounted for, maybe we're not quite there yet to provide us sufficient capital to claim and say that the company as a whole is cash flow positive. So we're not quite there yet. It's not that Mongolia is ready to check to do Bolivian exploration per se. We have made several. The mine started production in December of 2022, and we've made 3 shipments of coal. Each one is 3,000 tons. So this year, so far, we've sold around 10,000 tons of coal. That itself may not seem a lot, Matthew, because but you're looking at a thermal coal price exceeding $400 a ton, and even within China over 200. But in our part of the world, we're not getting 200, but we were getting at the time when it delivered to the end buyer close to 100. So you're looking at not insignificant revenue and cash flow. And I like to defer, because some of that is sort of going back to the CapEx, and some of that is revenue from exploration and trial versus commercial production. I rather to defer it until we announce the quarterly balance financial statements in Q1 to provide further colors on that.
So suggesting that's a sort of net of about $1 million at the moment. So what are you targeting?
Revenue well exceeded $1 million, yes.
Yeah, but what are you targeting in terms? Because I read in your presentation, you were talking about 200,000, 500,000.
I'm not going to check on our revenue target because thermal coal prices like silver, I mean, they go pendulums. So
no, just in tons.
Our target is about 120 to 150,000 tons this year.
Okay, understood. So I would put that at 10 million. Okay, fine. And so it's self-sustaining. Well, you said almost self-sustaining in the sense that how much money? So are you just plowing the money back into that to be able to do that ramp up? Because that ramp up is not going to come. Oh,
it is self-sustaining. The Mongolian operation is generating cash flow. I'm saying the company as a whole is not self-sustaining. So we're getting check. We're getting a check for every single shipment of coal that we sell. Absolutely.
And what's I don't know what the size or the amount of tons that you're looking at under the ground is for that project.
Oh, it's a 200 million tons. That is enough to feed generations.
Okay. And
if this mine had been sitting near Newcastle in Australia, it would worth billions of dollars.
Right, but it's not. So you got choices about, do you kind of ramp this up slowly and get some cash, or could you offload it, or are there not buyers out there for met coal at the moment?
Well, the issue is not so much the capability of the production throughput, but it's logistics. It's always the logistics for a bulk commodity like iron ore and in the case of coal. So over 65% of our costs. Well, actually, let me just add this up. If you account for delivered to the Chinese border, then 80% of our costs are logistics in wagons, in rail, and in trucking, and our mining cost is less than $5 a ton. So there's a lot of gatekeepers from $5 a ton to a triple-digit coal price, and that's what Glencore, right, and Trafigura make all their money, and these logistics expansions are very capital intensive. And it has to be well coordinated and planned. Like you cannot double down on the wagons, but not size up the road. So I think there's and then the sidings for the rail, and then the arranging the railway with the Mongolian railway, and then also coordinating on the Chinese customs. So it's a very sort of, Matthew, I would sort of, it's akin to a bit of like underground mining. Just because the price went up, you cannot just size up the size of the port. You cannot just increase the size of the portal and expect the throughput to double. And in the case of this bulk commodity, it's not the problem with the mine per se, but it's a problem with the logistics.
Right. Okay. Yeah, a lot of gatekeepers. So it's 120,000 is what you're aiming for by run rate by the end of this year. So therefore, by the end of this year, you're talking about a $10 million net dollar contribution to Silver Elephants. Let's say that happens in 2024.
Well, I mean, the price right now in China is any $150 a ton, depending on the location. And then, so if you look at 100,000 tons of production, then you look at revenue, okay, about $10 million. Yes.
Yeah, you're right. And does that enough to drive any kind of growth? Sorry, I'm assuming, because again, your presentation suggests that growth to 200 to 500,000 ton per year. Is that so? Basically, is Mongolia self-sustaining, and that's where the money shall stay and be invested to get that scale, or is there a plan to offload that, sell it, get some cash, and actually focus on silver? What I'm trying to work out is who's your favorite child here. Where do you want to focus your time and effort?
We are a micro cap, Matthew. So we have a team that have a grand scheme plan mapped out. Our focus, let me just emphasize, is silver. The Mongolian operation, we try to reach a steady state. And this year we already reached that sort of 10,000 ton per month. Right now it's a bit slower start because there's different holidays, Chinese holidays and Mongolian holidays, and we're dealing with different coal buyers and contracts and customs clearance. And so a lot of the startup teething issues that we're sorting out, but we're still fairly optimistic of getting to 100,000 ton by the end of the year. and we're not going to go above that. And we have this basic logistics already planned and in place to achieve that objective without expansion. So I think that the idea is have Mongolia be just, have a nice check, go back to Vancouver. But right now our team is our exploration team is in Vancouver, is in Bolivia. Bill Pincus was just in Bolivia a couple of weeks ago. And now with the rising in silver and in the gold price, and we kind of like dust up our previous sort of ideas and plans in early 2022, and we got to bring that project back on its path towards de-risking, permitting, FS, and the sort of the path that a typical junior would embark upon.
Okay.
Eventually, the coal would be spun out. There's discussion about spinning out the coal last year, but it was just too much going on. There's a lot of regulatory framework and burdens on TSX and TSX Ventures. They're working very hard, but it's taking 3 times as long to come back to us with every request. So you know what? At that time also we were just rushing out budget and really minimize our legal expenses. And so we're just saying, let's put out on the shelf for now. Most likely outcome is a spin out on the coal. And we'll have quite a bit of interest now on the coal, and not all that is North American, a lot of Asian investors want that. Maybe, get it listed on Singapore or in London or in Hong Kong, where they're more sort of, less averse to the climate change talks. And however we look at it, there is definitely a valuation on the coal, however you want to tag it. And I would just say the sum are a lot more than the part. The sum of the parts are a lot more than what Elephant is trading right now. However, cast all that aside, what we're doing is avoid and not sort of distract. We're just right now talking strictly. My goal is strictly to talk about the merit of our Blue Acai project, which I'm looking to do in maybe your next podcast, because I really want to hone in on this wonderful, wonderful asset that I cherry picked. First invested 15 years ago and cherry picked it in 2015. And I personally lived in Bolivia for 3 years. And, I'm the one that brought a lot of the guys that are running, that are spinning out their assets right now into Bolivia. I brought Silver Corp there. I brought a lot of I was in Bolivia all along, probably earlier than 90% of the Bolivian silver stories out there, Matthew. So I know Bolivia very well. And I believe we can thrive there very well too.
Okay, well, look, maybe let's do that, because I'm just kind of conscious of time here. I just want to kind of, because the first time I've spoken about Blue Elephant, get a high level sense of what it is that you're trying to do, and what you've got, and the sort of the timeframes. And I think I think it's been a useful conversation in that regard. So look, John, I'll say, look, thank you for today. Appreciate you coming on and spending your time talking to us and explaining what's going on there. With obviously, we're excited to see what silver is going to do this year, and we're big advocates of coal. Met coal. I think it's absolutely got a role to play, and any talk of anti-fossil fuel or anti-coal, I think
Matthew, just in conclusion, I highly recommend. I know the asset very well. We were approached by a number of strategic players at the bottom of the cycle, try to sort of, low-hanging fruit and just sort of bottom fishing, of which our board had rejected. We have no pledge to divest our silver asset. And our resource base of 100 million ounces with the zinc and lead byproduct is in excess of 250 million ounces silver equivalent. Our silver grades are around 80 grams per ton on a silver equivalent, well over 150. So I think we are pegging neck to neck with some of our peers that are treating a lot higher valuation. So I'm always available. I'm back to resume on Twitter, and always happy to entertain calls from investors that are seriously vetting our assets and looking into getting the silver elephant as in their eggs basket, as one of the eggs in their baskets.